Well, I'm so absolutely glad to be with you again on today. This is exciting opportunity. We're just coming in. I want to give you a chance to get in as we are preparing some great things for you on today. And when I say great, I really do mean some great things for you on this day. We are setting things up because you need to learn this credit system. It's very critical that we learn it. And if we don't learn the credit system, unfortunately, we're going to suffer a lot of lack because the credit system is an organized system. And so I want you to come in today as we are going to get started in just a second here. It's very important that we share this information with you. I'm Dwayne, the Success King, and I'm excited at the opportunity to constantly help you. My goal is to help entrepreneurs and individuals align credit, business, and life so the money finally flows. I really believe this is something that needs to be spoken about consistently because many times we're out of alignment. And because we're out of alignment, the money is not flowing. And so we got to get things flowing. So I want to talk about a couple of things today. First, I want to start with, let me ask you something real quick. Do you actually know how your credit score is being calculated right now? In this moment, without you doing anything whatsoever. Most people think they understand the system. They pay on time, they keep their balances low, they wait, they check their score every month and wonder why it barely moves. But here's what nobody told you, and I do mean nobody. The credit system was not designed to reward effort. It was designed to reward positioning. And there's a big difference between those two things. And so in the next several minutes, I'm going to show you exactly how the credit score system works. And more importantly, how it's been working against you and how to flip it in your favor starting today. Well, welcome to this stream today. I'm Dwayne, the Success King, and we're going to get right into this now. Now, I want you to do me a favor. Drop in the chat where you're watching from. And if you don't mind, give me a ballpark of your credit score, just a range, 500s, 600s, 700s. Let me see where you are starting. And I want you to know I highly appreciate you being connected as you come in. Whether you're watching this live or whether you're watching a replay of it, I really appreciate it. Now, what's the real problem? Why do most people lose? Let me ask you something else. How many of you have been doing everything right with your credit and it still feels like you're stuck? You're paying on time, you're keeping balances down, you're disputing old stuff, and yet your score isn't where it needs to be. Not for funding, not for opportunity, not for the life you are trying to build. That is not a discipline problem. That's a system problem, and here's why. The credit bureaus, Equifax, Experian, TransUnion, they do not work for you. They work for the lenders. Their customers are the banks, not the borrowers. You've got to let that land in your heart. You've got to think about that. Once you understand that, everything begins to change. You stop playing defense and you start playing offense. And that is exactly what we're talking about doing today. I want to share some myths with you. Myth number one, I just need to pay on time and my score will go up. Paying on time is the baseline. It is the floor, not the ceiling. The banks want more than that. Myth number two says this, my score is good enough to get business funding. Lenders don't just look at your number. They look at trended data, business structure, deposit patterns. A 700 with a messy business file still gets denied. Myth number three, The credit bureaus are working for me. Well, they work for whoever pays them, and that is not you. Understand who is sitting at the table and who is not, and you'll know how to play that game. Now, do me a favor and drop in the chat, which of those three myths did you believe before today? You can type a 1, you can type a 2, or you can type a 3 in the chat right now. I would love to see it. I really appreciate Road Tripping. I really appreciate you for being in there. Thank you for watching us, and we're seeing where you're at. We're going to help you. I really appreciate you being there. Now, let's talk about how the system actually scores you. And this is important. Now, let's get right into this. You probably heard of the 5 factors that make up the credit score: payment history, utilization, credit age, credit mix, and new inquiries. You've seen those pie charts. But here's the thing. Knowing the categories is not the same as understanding how the game is played. Let me show you what they don't tell you about each one. Factor number 1, payment history, 35%. Payment history is 35% of your score, the biggest factor. But here's what they don't tell you. It's not just if you pay, it's when the bureau sees it and how the account reports. One late payment can drop you 60 to 100 points overnight, even if you've been perfect for years. The system has no mercy. That's why positioning matters more than effort. Factor 2, utilization. Utilization is 30%. It's the second biggest part of the score, and this is the one most people never fully understand. The statement date, not the due date, is when your balance gets reported to the bureaus. So this is something you've got to understand. I need you to stop and pay attention to this part real clear, because this one concept alone has changed more credit scores than almost anything else I teach in my business. Your credit card has 2 important dates every single solitary month. There's the due date, when your payment is due, and there is the statement date, when the bank takes a picture of your balance and reports it to the credit bureaus. Most people think those are the same thing. They are not. If your statement closes on the 15th and you pay before your balance is being reported on the 15th, even if your payment isn't due until the 20th, the bureau sees near zero utilization. That number goes on your file. That number becomes your score. Same person, same habits, same income, completely different positioning. One is focusing on the statement. The other one is focusing on the due date. And that difference, the one shift in timing, can move your score 20, 30, even 50 points without opening a new account, without doing anything new, just doing the right thing at the right time. That's not a loophole. That is understanding how the system works. This system is designed to make you focus on the due date so you miss a late payment and skip the statement date, and your score drops and your interest rates climb. Factor 3, credit age. Credit age is 15%. This is where people make a mistake that costs them without ever knowing it. Closing old cards, destroying this factor. Even a bad old account can help your average age more than it hurts you. Before you close anything, think about what it's doing for your age. Factor 4, credit mix. Credit mix is 10%. Lenders want to see that you can handle both revolving and installment credit. Revolving, that's credit cards. Installment, that's loans, car notes, student loans. One type of loan is not enough. They want to see the full picture. Factor 5, new inquiries. New inquiries is the last 10%. Hard pulls are timed. Rate shopping windows exist. Applying for credit too fast without a strategy can cost you 20 to 30 points for no apparent reason. We're going to talk about how to handle this in Model 2. And this is very, very important. So FICO versus Vantage Score, why your score looks different everywhere. So quick note, I want you to really understand this before we move on. Have you ever noticed that your score on Credit Karma is different from what your bank shows or what a lender pulls when you apply? That's because there are multiple scoring models. FICO 8, FICO 10T, Vantage Score, Vantage 4.0. They each weigh different things a little differently. FICO 10T looks at trended data, not just what your score is today, but how your balances have been moving over the last 24 months. Are you paying down or running them back up? Vantage 4.0, which I did a deep dive on in one of my most watched videos, now includes rent and utility payment history for some consumers. This is a game changer if you are building from scratch. What this means, though, the score you see is not always the score the lender uses. Know which model your lender is pulling before you apply. That is part of being positioned correctly. I want you to do me a favor and drop in the chat. Has your score ever looked different on Credit Karma versus your bank or lender or wherever else? Drop yes in the chat if that's happened to you. I'd love to hear that right now. I got it. Yeah, I get it. I get it. I get it. Has it ever happened to you? Drop a yes in the chat. Now, let's get to Module 2, the 3 moves banks count on you not making. This is very, very important. Now that you understand how the system scores you, let me give you the 3 moves the banks count on you never figuring out. But today, we're going to help you figure them out. When I say cheat code, I want to be clear. I don't mean anything shady. I don't mean anything illegal. I mean understanding how the system actually works and using that knowledge the way the system was designed to be used. The banks know this. They just don't advertise it. Well, I'm going to advertise it to you today. Move number 1, the statement date hack. Find your statement closing date, not your due date. Your statement closing date. Pay your balance down before that date closes. The bank reports near zero utilization. Your score goes up. No new accounts, no new applications, just better timing. So here's the pro move. Aim to report below 10% on all of your cards, not just one. Each card reports separately because each one matters. Move number 2, authorized user positioning. When you are added as an authorized user on a strong account, that account's full history transfers to your credit file. The age of the account, the utilization rate, the credit limit, all of it shows up as if it were yours. Pro move. Look for accounts that are at least 5 years old, have a high limit and a very low balance. You would love to find something under 5%. Those 3 things together can move your score fast, especially if you're looking to get something like a vehicle or a mortgage or even a credit card. And you don't have to wait years to build that history yourself. Move number 3, the inquiry timing window. If you are rate shopping for a mortgage, auto loan, or business funding, and multiple lenders pull your credit within 14 to 45-day window, those hard pulls are counted as one inquiry. Entrepreneurs miss this every single time. They apply to one lender, wait, get denied, apply to another, wait, get denied, and they rack up 5 separate hard pulls that hurt their score for 12 months. So here's the pro move. Shop multiple lenders inside the same 30-day window. Let them compete. Your score sees it as one event. Now, I want you to do me a favor and drop in this chat Which of those three moves are you putting into action this week? Number one, number two, or number three? Drop it in the chat, or all three. And I'm so glad I see you in the chat. Road tripping, I really appreciate you in there. You're asking like car payments, all that. Yes, it's very good to have you with us on today in this chat. Now let's get to module 3, your CBL positioning framework for this year. Now this is very, very important, and I want you to really listen in. Here's where I want to take you to a deeper level, because everything we just talked about, that's the credit piece. And the credit piece really does matter, but credit alone will not get you funded. Here's what I see over and over, especially with entrepreneurs. They clean up their credit. They get a 720, a 740, and then they go to apply for business funding and they still get denied. Why, you ask? Because the lender looked past the credit score and saw a business that wasn't set up right, or deposit patterns that looked inconsistent, or a personal and business file that were completely mixed together. That's why I teach the CBL Wealth Blueprint: credit, business, life. All three have to be in alignment, because the bank is not just looking at one thing. They are looking at the whole picture. And this is important. Let me walk you through the CBL alignment check. And this is important. This is something I go deep on with every single client. C is credit. Are you positioned, not just scored? 720 or better on FICO 8. Clean Vantage Score 4.0, trended data showing balances going down over the last 24 months. Low utilization across all cards, not just one. Multiple types of credit on file. That's what positioning looks like, not just a number. B is for business. Does your business look fundable? LLC filed correctly. EIN number. Business bank account separate from personal. At least 3 business trade lines reporting. Consistent deposit patterns, not random, not lumpy. Professional address. Business phone. Business email. That's what a fundable business looks like to a lender. And the L is for life. Is your income pattern predictable? Lenders want to see behavioral consistency, predictable income, disciplined spending, a personal financial picture that says this person is stable. Inconsistent deposits, cash flow spikes, irregular patterns, all of those raise red flags. Even when the score looks good, the life piece is what ties the whole picture together. Now, this is critical and important. The credit score is just the snapshot, but your whole financial life is the photographer. The bank doesn't just look at one picture. They look at the whole album. And if your credit is right, but your business is a mess, or your life file shows inconsistency, that album tells a story that costs you funding every time. That's why alignment matters. Credit, business, life, moving together. That is the CBL Wealth Blueprint. Listen, drop in the chat on a scale of 1 to 10. How aligned is your credit, business, life right now? 1 equals just getting started. 10 equals fully positioned. Drop your number in the chat. Be honest. No judgment here whatsoever. You know, I want you to really get this because it's important. If you have any questions, we'd be so glad to get those questions for you. All right. Be so glad to get those questions in for you on today as you are watching this live. I'm always excited to help people understand the things that are important, the things that make you line yourself up appropriately so that you can win. Someone watching right now wants to know, what is the fastest way to raise a score sitting at 650? I can see, I get these all the time. You see, the answer is the statement date hack. Lower utilization across all cards. This results in 30, 60 days, you're going to see something major change. Lower utilization. In 30 to 60 days, your scores are going to see a rapid increase. Here's another one that I see. Does opening a new credit card hurt you in the long run? Answer, it depends on strategy, inquiry timing, credit mix, deliberate account opening, not random. And this is very, very important. What score do I actually need to get business funding? This is a great question. Not just the number, it's the alignment. A 720 with a solid business file beats a 760 with a messy one. Well, I tell you what, it's exciting. The most important things that are standing out to me today is that if you are in a position where you say, I got a great score, like I see there in the chat, great score, and I'm trying to figure out what to do with it next. Well, it's all about these three things that we're talking today. See, the credit system understands their system, and they're going to set things up to collect from you. But your great score, your great strategy is going to allow you to do things that uses their money to advance your purposes. Now, let's bring this home. Here's what I want you to take from today. The credit score system was not built with you in mind. It was not designed to help entrepreneurs. It was not designed to help lenders. It was set up so that the lenders would actually be able to be served, and you, the individual, the entrepreneur, would be hurt. But that doesn't mean that you can't use it. In fact, once you understand how it works, you can use it better than most of the people who built it, because you're not playing their game anymore. You're playing yours. When you understand the statement date, you stop overpaying and underscoring. You see, the due date is going to make sure that you overpay because they're going to hit you with so much interest. But the statement date is going to make sure you underpay, lower your interest, raise your score. When you understand authorized user positioning, you gain history. You didn't have to wait years to build. You're just 20 points away from being able to get a better interest rate on that car loan, that funding, that mortgage. So you get that authorized user positioning in place 45 days early, and now you qualify for that better interest rate. Therefore, lower payments. Therefore, lower interest is going to be taking out more money in your pocket. When you understand the inquiry timing window, you stop giving away points for no reason. You're going to apply at the right time. You're going to set your mind and say, you know what? I'm going for a car loan. In the next 30 days, I'm going to apply in multiple places so that it's only one pull. I'm going for the mortgage. I'm going to apply in multiple places in the next 30 days so it's only one pull. And when you align all that with a clean business structure and a consistent life pattern, credit, business, and life moving together, that is when the money starts to flow. This is not motivational talk. This is how it works. Success is not random. It comes from alignment. And today you took a step toward being aligned. Step one, I would love for you to subscribe and like. Do me a favor right now. If you're not subscribed, subscribe to this channel and hit that like button and that notification bell. The more people who see this, the more entrepreneurs we help, the more individuals we help align. Help me get this information out. Step two, comment. Drop a comment and tell me what was the one thing from today that you're putting into action this week. I read every single comment. Step three, if you want to go deeper, if you want someone in your corner helping you align your credit, business, and life specifically for you, the link is in the description. No guessing, no wasted time, just a clear path to being funded and positioned correctly. Well, my friends, I am so absolutely glad to have seen you here today. Whether you're watching this live whether you're watching it on a replay throughout the day and the week, listen, your positioning matters. You've got to set yourself up effectively because the banks are trying to use their system against you, but your insight, your knowledge is going to help you play your game and use their system for your benefit. Well, I look forward to seeing you again here. I'm live every Wednesday, 9 a.m. Eastern Standard Time. We drop videos on Mondays and Thursdays at 9 p.m. Eastern Standard Time. I look forward to connecting with you again real soon. You be blessed. Have an awesome, awesome day. Let's get after it.